Welcome to the Commercial Know-How podcast, where mortgage brokers learn how to successfully launch, manage and grow a commercial finance business. I'm your host, Belinda Gibson. Join me as I draw on more than 25 years of property finance expertise to show you how to diversify beyond residential and build a growing business for all seasons. Don't forget to hit subscribe and visit commercialknowhow.com.au to download my free ebook to help you get started in commercial finance. Now, sit back and enjoy the episode. Hello and welcome to Commercial Know-How. Today we are going to be talking about background research. So you have now completed the discovery call with your client. You have completed the pre-appointment questionnaire and you are now preparing for the first meeting. You may be putting an agenda together, which we definitely recommend, or you may be just putting some notes down on paper, which is also perfectly fine. So here are some sources that you can research so you can gather some background information about the business and your client before the meeting to make sure that you are prepared before you arrive. Now, some sources that you can research or business information sources are things like company websites, company searches, company financials, and even their bank statements. So let's start with the company websites. So here I want you to explore their website to gain some insights into the products, services, and values that they have. Now, do they sell products online, offer services, or is the website just for information? And does the website have a checkout? Now, this might seem like an odd question, but if there is a checkout function or an option to buy something from the website, it does tell you that they have a need for a merchant service or some sort of transactional banking to run their business. Now, second to this, have you completed a Google search? And do they have any reviews on board? How many do they have? And what do they say? Have a read of these and get a feel for the business. How long ago were those reviews also reported? So if they're recent, it can tell you that they're actively collecting their Google searches so more people can find them online. For company searches, these can be completed on the ASIC website and it will provide key data around the ownership of the business. So ABN searches or ACN searches can be completed online and they will tell you things like the business start date, who the directors and shareholders are, and also how many shareholders they are and what percentage shareholding do they actually have. Always complete an ABN search to check that the entities relating to your transaction are registered for GST, when the ABN was registered, and also when they were registered for GST. Any trading names will also be registered here under the ABN lookup tool. I also recommend that you download and save those documents from those web pages so that you have them as a resource later. Now, a PPSR search, a company and business search, can be found on the ASIC website and will provide key data for you. ABN and ACN numbers, business start date, who their directors and shareholders are, but also what percentage of those shareholders actually holding in the business. I will always complete an ABN search and download and save that document. Now, this will tell you that the entities are registered for GST and when they were registered. The ABN search will also tell you any trading names that are registered to that particular business. Now, a PPSR search can also be completed on the business and it will advise if any lenders or suppliers have a charge over the business, their assets or the goods. Now, if you've ever done vehicle finance and it's been secured vehicle finance, you will remember that the financier will take a charge over the business This charge is called a PPSR. Now, if your client has any vehicle or asset finance leases, they will have a PPSR registered. Now, we recently had a scenario where a client had 5 PPSRs registered to a bank, but only 4 leases in place. Now, one of those leases was recently paid out, but the PPSR had not been released. So if you do come across a scenario like that in the future, you can contact the lender and have that PPSR charge actually removed. But this is a good tool to keep tucked away to ensure that all leases or any liabilities have been disclosed. Now, company financials are also a great tool to do some research on the client. Now, you may or may not have the company financials before you go to that first meeting. You might get them afterwards. But the financial statements tell a story about the client's income and their expenditure. It also helps you to understand the business assets, the liabilities, and what makes up their balance sheet. Now, if you have the profit and loss or even the balance sheet, you can highlight any significant changes between the financial years that are really, as a rule of thumb, greater than 10%. And you can flag these using a highlighter, but also use them as a tool to ask the directors or the shareholders that you're meeting with, what was the change here? So if you notice that, for example, repairs and maintenance in one year were $20,000, but the following year those expenses were $80,000, ask them what happened there. It may have been that, they've had to replace a motor, or they've had some equipment breakdown that needs replacing. But generally there is a story if there has been a significant jump or also a decline in some costs. Now, who is their accountant that prepared the financials? I always like to Google who they are to see what size the firm is. Do they generally work with business clients? Do they specialise in any particular areas? Often this might create a bit of an open door to develop relationships with the accountant down the track, which may evolve into a referral source. A good tip here to provide some value to your client, if you complete a business loan for them or a commercial lease or any type of finance for the clients, ask them if they would like you to email the loan contracts to the accountant so that when the end of the financial year comes around, they already have the loan contracts when they're preparing accounts for that coming financial year. It's a bit of an add value and a good service proposition. It doesn't cost you anything to email those documents to the accountant. It saves your client a little bit of time and they will appreciate the offer. The next one that I've got here for research is the company bank statements. Although it may sound a little bit like a chore, but if you review the last 90 days of the bank statements, you can identify some regular payments like leasing, insurance premium, wages, taxes, superannuation payments, that sort of thing. You can also look to see if they have any overdraft limits, if the account is going into debit or whether it remains in credit all the time. If the client does have an overdraft, you're wanting to make sure that they're staying within their approved limits. This comes back to that behaviour when we're talking about those 5 C's of credit. What I also want you to look for is cash flow patterns, how debtors make payments if they have them, if they have any merchant facilities or any potential financial challenges. We don't want to see things like dishonour fees or over the limit fees, exactly what you'd be looking for if you were looking at your residential home loan clients. Now, if clients do have debtors or creditors, it is common to ask for a 90-day debtor and creditor listing that would be applicable to the business. Now, here you can identify who their main clients and suppliers are, if they have any concentration risk, and what their payment practices are. Now, payment practices can be them receiving money on time or whether they are paying their suppliers on time. We want to see things in that current or 30-day column. We really don't want to see figures in 60, 90 and 90-day plus columns unless there are some extenuating circumstances like extended trading terms or some other issue that may be being addressed. Now, if you're not sure what concentration risk is, what I want you to think about is how many actual debtors they have. So how many customers. If they've only got 3 or 4 main customers, that might be considered a concentration risk to a bank, depending what type of industry they are in. But if they were a food wholesaler and they're selling to restaurants, you would expect to see quite a large number of debtors in that listing. Now, while these types of sources do offer a great starting point, remember that building relationships and gaining an understanding of the client and their business goes beyond that source level of documentation. Engaging your clients in conversation will help you uncover what isn't apparent publicly. So remember to let the client talk, ask open questions, and make sure that you are sticking to your agenda so that when you leave, you have most of your questions answered. Outside of those items, always look at social media. So I tend to research the trading business on Facebook and Instagram to get a feel for their business and their interests. I'll also try and connect with the directors on LinkedIn. Things like software can also help you do a little bit of background research. It can be a bit of a time saver in the long run as well. I have found that using services or software platforms like Ceto Plus can assist a great deal in providing some background research. So while these types of platforms can perform an ASIC company search, they also run things like sanction checks. So this software will check that your client is not a politically exposed person. It will scan for adverse media and will also identify potential reputation or financial risks in the applicant. In terms of security, the software can also perform property searches or complete asset valuations if we're talking about a business that might have a fleet of vehicles, for example. Now, in the future, I think software programs like this will become more sophisticated and integrated into other platforms like aggregation platforms or direct-to-lender, which will improve the broker experience so we're not double-handling, writing our documentation, submitting it to our banker, and then having them submit into their actual application software. When you're doing your background research, you may not have all the documentation that we've covered off today, but if you can just cover off a few things and make sure you are prepared for your meeting. If you are going to the client's premises, please Google the address and the travel time, as you certainly don't want to arrive late. You want to make a great first impression. And that brings us to the end of today's episode. I hope that you have received some insights into the background research that you can complete before you go out and meet that first client. We hope it will bring you confidence in preparing for that first meeting. Thank you again for listening to the Commercial Know-How podcast, and don't forget to visit commercialknowhow.com.au, where you can download my free ebook to help you get started in commercial finance and also get in touch with me. And make sure you subscribe on your favourite podcast player so you don't miss an episode. And we will speak again soon. Thanks for listening to the Commercial Know-How podcast. Don't forget to visit commercialknowhow.com.au where you can get in touch with me or download my free ebook to help you get started in the commercial lending space. If you enjoy the show, please hit subscribe so you don't miss an episode. See you soon.